What were you looking for from Jerome Powell, and did you see it?
Well, I'm looking for him to follow through with what he's done as a Federal Reserve governor for the last 5 years, and not to succumb to pressure from the White House. And we know the White House doesn't really understand the independence of the FBI or of the federal judiciary or of the Federal Reserve. And Governor Powell, who wants to be chairman of the Federal Reserve, Powell, was reassuring that he will not put up with that pressure. I want to believe him. I don't think he's lying to us. I just know that the White House is, if past is prologue, I know the White House will continue to try to put pressure on him, especially on regulations. I mean, we know that we have bank rules in place. The Federal Reserve has had bank rules in place that have made the financial system in this country more stable than it was a decade ago. I know the president has put a lot of weak regulators, Wall Street lawyers, Wall Street bankers, in these other regulatory agencies, and I'm concerned that Governor Powell will try to manipulate him in the way that the president has tried to do that elsewhere. Well,
during your hearings, there was a lot of talk about regulation, about where we are today, where we should go in the future. And he drew a very clear line, Mr. Powell did, between community banks on the one hand and the very big banks on the other. Did that reassure you about his approach to regulation of the big banks?
Yeah, of course, I agree on that. Community banks didn't cause this. Senator Kennedy asked a question, but did community banks cause any of the problems we had 10 years ago? Of course, the answer is no. We know that. That's why we want tailored regulation for the smaller banks. Whether it's a Third Federal in Cleveland, it's an $11 billion bank, or the First Bank of Sycamore, a much, much smaller bank of that in northern Ohio. So, but I'm not convinced yet that this Fed, with the director of supervision that the president's already nominated, is not going to go too easy on the big banks. There's this collective amnesia in this town, especially to my right, if you will, on the banking committee, a collective amnesia about what happened, that Wall Street greed brought this economy down. As I said in the hearing, I live in Cleveland, my wife and I, zip code 44105. In 2007, the first half of that year, more homes were foreclosed on in that zip code, in my neighborhood, than any zip code in the United States. I still see the aftermath of that, and I'll be damned if I'm going to stand by when a bunch of regulators and a bunch of Republican senators who are in the pockets of Wall Street, or a president that's already filled up his cabinet with Wall Street executives and his regulatory body, that they're going to go back in time that way. We just can't let that happen.
That may be the situation with respect to members of the cabinet, but with specifically respect to Jerome Powell, from what you've seen and what you heard, do you have any sense that he actually does want to roll back the tide on the regulation of the big banks who got us into the trouble?
I don't see signs of that. My concern, and I like Jerome Powell. I voted for Jerome Powell. I know he's a Republican. I'm a Democrat. I voted for him twice to be a governor of the Federal Reserve. My concern is already the president has put into this newly created job, relatively newly created job. He'll be the first nominee for it, the director of supervision at the Fed. He clearly is a Wall Street guy, and he was put there, I think, by a president that bends over backwards to be pro-Wall Street, which is, by definition, in my mind, anti-mainstream. And I was in Youngstown recently. I was in Toledo recently. I'm in Cleveland. I was in Columbus recently. I've seen what Wall Street greed did to my state. We haven't recovered from it yet. A lot of people have, but a whole lot of people haven't. And so I want to hold Governor Powell, if he becomes chairman, I assume he will, I want to hold him to a high standard. So far, I like what he's done. I mostly like what he said today, but I'm always skeptical, particularly because of the director of supervision, the bank governor in charge of the governor in charge of supervision at the Federal Reserve, who is almost out of central casting from Wall Street, and that concerns me.
So one of the things that you all discussed with Mr. Powell was the so-called SIFI designation, the strategically important financial institution designation. Are you open to the possibility of some adjustment in defining who the really big banks are that are strategically important to the financial system?
Oh, yeah, I'm very much part of that. I'm not a sponsor of this bill, not because of SIFI designation, but because it backs off the most important tool, as Governor Powell said, the most important tool probably since Dodd-Frank is the stress test. He didn't say this, but both CCAR, and DFAST, the kinds of stress tests that make sure that banks are able to withstand a severe downturn in the economy. I want to make sure those are still in place. Certainly the community banks don't need to do it. The banks under 100 billion don't need to, but I want to make sure that banks in that sort of the banks, I'm proud in my state to have I think I'm the only senator with 3 of those regional banks in my state. Fifth Third out of Cincinnati, Huntington out of Columbus, Key Bank out of Cleveland. They're all great corporate citizens. They have been generally pretty conservative in a good way in the way they've run their banks. I admire their leaders. Beth Mooney, the CEO of Key Bank, was just chosen by the American Banker as the Banker of the Year. I see all that. I just want to make sure that the stress tests stay in place in the right way and are regular enough. I'd prefer annual because I think it's worked. Banks are very profitable now, and I understand these rules cost banks money, but I understand what happened 10 years ago, and I don't blame any of those 3 banks for sure in Ohio for what happened. I know it's the fingers are pointed directly and rightly at Wall Street, but I'm also concerned about the regionals to make sure that they are safe, that the safety and soundness, that some of the same safety and soundness rules apply to them. I'm okay with raising the $50 billion SIFI threshold, raising it dramatically, but you got to do the other things right too.
So among other things is the too big to fail designation. And one of the questions that was asked of Mr. Powell was, at this point, do we still have a problem with too big to fail? And he said no. He thinks we've gotten past that. Do you agree with him?
Well, I agree that the banking system is so much safer because of Dodd-Frank, even though my colleagues who are always too pro-Wall Street, they want to repeal lots of Dodd-Frank, including this new bill. But they want to go further than that. They show it all the time, whether it's to emasculate the consumer agency or whether it's to back off on the stress test. The reason Governor Powell could answer yes, these banks aren't too big to fail, is because of Dodd-Frank and a Federal Reserve that's done it right. I don't want to see us unspool a lot of those both regulators and those rules of protection. And to me, government regulations can be really good things. It's why Lake Erie is cleaner than it was when I was a kid. Sometimes government regulations, sometimes rules don't work. I want to get in the right place in the banking system that always protect the safety and soundness of our major banks.